benefits on the fly.
I was thinking about a couple of phone calls I had yesterday with two smaller companies. One had about 10 employees, one had about 14. And our minimum group size that we are able to help is groups of 10 or more. That's because a lot of the programs that we offer, we're able to do our best work when they have about 10 employees or at least $100,000 a year in annualized premium. We're often able to find savings anywhere from 15 to 30%. So that's a minimum of $15,000 to $30,000 annually that we're able to bring as savings to our new clients. And I think a lot of times, when we talk about all the different alternative funding strategies that are available that we can help implement for our clients, depending upon their risk tolerance, the health of their employees, and the claims data, I think a lot of times the assumption is that those things that we do are really only reserved for larger companies. So I think a lot of times the sentiment is that, oh, that sounds all well and good, but that's not for my company. That's for larger companies, I'm sure. Saving 20%, we've just never seen anything like that before, so I'm sure that's for bigger companies. I think that a lot of times you can come up with a lot of solutions and there can be a lot of talk, but I think really for me, what it comes down to is the evidence. Is there evidence to support it? And what I love about the end of the year and the first of the new year is we're able to take a look back at the companies we were able to help last year, and surprisingly, none of those groups were over 40 employees. I think the largest company had 39 employees. Yeah, so just under 40. A lot of the companies were, a dozen employees, 15 employees, smaller companies that we were able to help. I mean, one 14-life company, we were able to save over $100,000 a year off of their premium from what they were paying the previous year. And other companies, we were saved maybe as small as $10,000 a year. But $10,000 is still significant, especially when we're talking in all cases, we never had to water down the benefits. Every single client that we helped last year, their benefits either remained the same or they actually improved. So the employees got a lower deductible or a lower copay or lower out-of-pocket. Two of our groups, we actually took from very high deductibles down to a zero deductible for their plan, layering in certain HRA strategies. When looking back at those numbers, it was pretty impressive to see that I think the total number that we were able to save, annualized premium savings that we were able to deliver across 13 new clients last year was $559,000 total savings. So over $500,000 in premium savings without watering down any benefits. And the majority of those groups are just a dozen employees, between 10 and 20 employees, some as high as in the 30s. It pushes back on that narrative that these types of strategies and these savings are really only reserved for those larger companies, the Fortune 500 companies, the big enterprise level businesses. And I know that there's a lot of large national brokerage firms that go after those large groups, but there's so many more individually owned or privately owned businesses that have a dozen employees or so that are struggling because their health insurance benefits are such a significant cost and such a significant part of their profit and loss. And they just don't see any end in sight. It's just it's not sustainable to continue to be faced with increases every single year, especially if that's outpacing the growth of the company. This is where it's shocking to me. I would say 90% of Washington businesses are overpaying for their health insurance, just purely based upon my experience and meeting with businesses over the 26 years I've been doing this. I would say 9 out of 10 new clients that meet with me, that I do a benefits consultation with, we're able to identify better options for them that they've either never been presented before, never knew existed, or just strategies overall that make more sense for that company, all while keeping one thing in mind, which is we don't ever want to reduce the benefits that the employees are getting. So our number one goal is how do we improve the benefits that an employer is offering their employees first and foremost, and can we do that at the same or lower cost than what you're currently paying? Those are the two tenets by which we make every recommendation, and we hope every employer makes a decision. The employers that are not a good fit for us are the employers who just want to jack up the deductibles and do whatever they can to just keep those costs rock bottom, bargain basement pricing. That really just doesn't align with our values and what we're all about, because our whole goal is to really try to focus on the end user, the employee, and how do we make their experience better? How do we bring more value to them when it comes to their employee benefits? So they really recognize it as an important part of their compensation package, and it helps to glue that employee to that employer because they really feel like that employer is looking out for their best interest and recognizes that health insurance affects so many facets of an employee's life. So there's a lot of stress around healthcare and the cost of healthcare. There's a lot of financial stress. There's a lot of financial concerns. And then obviously the physical health, because nobody really expects to have a medical claim come up that's in the, tens of thousands of dollars. And when it does, you want to make sure that you're on a good health plan that's going to really take care of you. Our focus is how do we improve that first and foremost, and if we can do that without increasing the cost and more than likely lowering the cost, then that's our twofold goal.